Hi, it's Robert Mendelson, Fractional CMO here in beautiful Montreal, welcoming you to another episode of the Fractional Pros Canada podcast. We're part of Fractional Pros Canada, the home for Canada's fractional community, and you can find us on Facebook. We bring you conversations about everything fractional that matters for fractional executives and businesses from coast to coast. Think of this as your go-to spot for real talk, practical wisdom, and strategies you can actually use, all without the corporate fluff and with plenty of Canadian content. Whether you're a fractional pro or a business in our great country of Canada and beyond, this conversation is for you. Grab your espresso and let's dive in. Welcome to the Fractional Pros Canada podcast. I'm your host and fractional CMO, Robert Mendelson, here in beautiful Montreal. Many startup founders hit a point where they need executive level strategy to break through to the next level. They need a CMO, Chief Marketing Officer, a CFO, a Chief Growth Officer, but they can't necessarily afford the six-figure full-time C-suite salary. So what do? Well, today we're assembling the ultimate fractional C-suite for startups to find out. And joining us are three seasoned fractional leaders, all have experience working with startups. First of all, in Montreal, just down the street from me, we have Tanya, fractional CMO and CEO of founder of the Articulate Collective, who's driven transformative growth for high-tech companies across 8 countries. It's a lot of countries. Down the street, down the 401 in Toronto, we have Wilson, a fractional CFO, founder of Quantum Advisory Inc., specializing in getting startups capital raise ready. And then not too far from there, a little further west, Brantford, Ontario, brings us Trevor, a growth strategy advisor, founder of Marketing Genius HQ, who helps founders when, as he says, DIY isn't cutting it and duct tape won't scale. Today's Fractional Pros Canada podcast is powered by YourCMO.ai, now building agentic AI agents and workflows for all fractionals and businesses. Learn more at YourCMO.ai. That's YORCMO.ai. Tanya, Wilson, Trevor, welcome to the pod.
Thank you, Robert.
Awesome. Thank you so
Great
much.
to be here.
All right. This is going to be fun. It's not often we do a big panel like this. So let's get into it. So each of you has had a significant career in either corporate or agency life before launching into your own fractional practices. So let's start there. So Tanya, we'll start with you. You've worked at some major global companies like SAP. You have experience across 4 continents. What's your experience moving from that to serving startups in a fractional capacity?
I'll start by saying that it was one of the best career moves I ever made. Equally one of the scariest. It was very deliberate. So I worked in large enterprise environments almost my entire career at that point. So 18, 19 years in, I'd worked very hard to climb the ladder and get into a global VP role, which was my last in-house large enterprise role at SAP. And found that with each promotion and with each year that passed, I was removing myself more and more from the actual marketing. And in 100,000 plus employee companies, as a marketer, it can be very difficult to get a sense of whether you're even moving the needle. Even at a senior level, the gap between the marketing teams and the data teams that would be able to help provide that visibility can feel very large and sometimes insurmountable. And so, long story short, I was starting to question whether I should embark on a new career change. I have an entrepreneurial spirit, and so I was thinking, all right, do I totally shift gears and go do something completely different? Or maybe I look at stepping out of large enterprise and into the startup ecosystem and see what it's all about and work for somebody else, work for another entrepreneur who's ahead of the game and see if this is see what this lights up in me. So I made the move. Again, I'll stress that it was really not easy. After 18, 19 years, I was even questioning then, did I even have what it took or know how to help a high growth company scale? Did I even know anything about marketing? Really? I know. Yeah,
No
sounds crazy.
imposter syndrome there.
Well, okay, so it is a very different muscle working in large enterprise and working in the startup
Yep.
ecosystem. Luckily, a couple of weeks into my first startup role, I realized, no, I have learned something along the way. I do know what I'm doing, but there is a muscle that needs to be exercised here, and there is a difference to being front and center, working with co-founders, and having a direct hand in helping a company grow. So 4 years later, I am happily camped out in the high growth tech and SaaS space. I founded the Articulate Collective after 2 years of working in-house full-time as head of content strategy for a startup, and quickly realized, not that quickly, about a year in, and we were a seven-figure C-suite marketing team, one CMO, and with time, we were able to achieve a lot, but the agility wasn't there. The innovation was lacking. We were locked into a very expensive team and didn't have any additional funds to bring in other freelancers or other thinkers, other capabilities into the team. And so we were expensive, but we were limited. And by the end of my 2-year contract with them, I was 100% convinced that there was an opportunity to disrupt this playbook by which a lot of startups will only bring in these expensive permanent marketing teams when there's real money in the room and they can afford it. I thought, it's really tough to scale a business from scratch at that point, which is what investors and founders want. What if we could bring in senior marketing expertise, depending on the phase of growth, but senior marketing expertise at a fraction of the cost, and maintain the agility to dial up, dial down, bring in, bring out, because we all know that each phase of growth is not equal, and the marketing that is required and the support that's required, whether that's from a finance, sales, growth perspective, strategy perspective, is not the same at the beginning as it is further or along the growth journey. And when you lock yourself into those expensive permanent marketing teams, you really do limit yourself. And I've now seen firsthand, 4 years in, that when you take this fractional approach in the early growth stages, you can get an incredible competitive advantage and move much quicker than you ever could, honestly, with a permanent full-time team.
Okay, so
So
Trevor, I saw you nodding your head there a few times as Tanya was walking us through her journey. So tell us about yours. You also have years of corporate experience in SaaS and telecom. What was maybe there was a pattern you saw also that led you to create Marketing Genius HQ to fix what you call, again, direct quote, overlooked roadblocks for founders.
Yeah, so for me, it was always about just making sure that there's people out there who are trying to do things and helping them figure out ways to actually do it. So, just a little bit of background on me. Yes, I spent a lot of time in corporate, and you know, like Tanya, you just get to that point where you just like, is this really doing anything? Is this, am I helping this move this needle for this business in any positive way? And I found that as I was continually doing this, I was still talking and mentoring other people, and in not only inside that business, but also on how to be an entrepreneur. So a little bit of background from that back in the day when I was younger, I've always kind of had this somewhat of an entrepreneurial spirit where, I was the type of kid who would go to someone's house and say, hey, do you want someone to shovel your lawn or shovel your snow or mow your lawn? And then hire the kid down the street to do it, and then take the money and, and pay them out their share. Right. So that was kind of how I got started. And then it just always was something that was a part of me. And it's like, anytime I see somebody who needs help in those types of areas, I figured there's a lot of knowledge in my head that I've got built up over these 30 years of sales and marketing experience that I've gotten now. So it's like, how can I utilize that to help people? And, I'm a classically trained marketer. I've also worked in areas where I've done, worked with software development teams. And I've also looked at that very much from a sales lens, because that's actually how I got my start. And it was in sales. So I'm one of those people who kind of takes all of those three elements. And once you look at all of those three elements in a specific way, you can start to figure out how you can actually help a business grow. A lot of times when we're talking about small businesses, they really have no idea when it comes to sales and marketing. They know what it is that they've got. They kind of have an idea that it might be something that they can sell, but they don't really know much past that. And then they'll start to, Google stuff and ask people, how to do those types of things. And they'll get all kinds of responses from everybody else. And then trying to figure out what it is that's actually going to be useful for them versus not, this is where they get stuck. And so that's where I kind of like to come in and say, okay, you know what? This is bullshit. This is okay. You should look here. You should try this out. You should look at from a very, very basic perspective, from a marketing lens. Do people actually want to buy what you're trying to sell them? And that's the first place you need to start. And if you can't figure that out, then you really need to go back to the drawing board. And I can't tell you how many times I've told young entrepreneurs and young youth who I meet and I mentor, I'm like, is this really an idea that you think you want, or do you think other people are going to want it? And if you spent a lot of money going down that road trying to figure out if other people actually want it, and you haven't figured that out yet, that's a bad sign. So that's kind of what I hope to try to help people avoid those types of situations.
Yeah, and I love what you say about the first part is when you don't even know what you don't know, you've got a lot of roadway ahead of you. Wilson, you were a director in the deal advisory team at PwC, working on multi-billion-dollar restructurings. So what made you pivot from that world to focusing on early stage companies? This is the other end of the spectrum.
Thanks, Robert, and happy to be on the podcast with everyone here. So my background, I spent 10 years of my practice, 3 at Deloitte to get my CA in the traditional audit and accounting path, and you realize really early on that audit is not the funnest thing, and so I thought, oh, what else could I do? So I went over to PwC and their deal advisory team, and you really learn hands-on finance, especially doing corporate restructuring. And over that time, you learn a lot about people, how they think about managing the business, especially going through bankruptcy and restructuring. It's the mature and the other side of the life cycle. You see all the things that have gone wrong over that time. And over the 7 years, as I moved up the ladder, I got a lot of experience of the do's and don'ts of running a mature business. And during COVID, tech was booming, everything was happening, and those kind of early stage innovations, they don't reach the big firms until you're a multi-billion-dollar company that can, afford a Big Four type of advisory service. So I thought, you know what, I'm going to make, for an accountant to be risk adverse and to go out on their own, I'm going to go do this on my own, right? I'm going to try this out. Let's see how this goes, right?
Breaking the mold.
Exactly. And I think as all of us on this show can attest to, it is one of the most interesting feeling to put yourself out there, to demonstrate your skills, which when you work for a big company, you're doing that every day and you have expertise. For me, it was financial modeling. I'm really good with Excel, building three statement financial models, balance sheet, income statement, cash flow, 3 years out, 5 years out. And I thought, doing due diligence for a big company or preparing, the data room for big companies, it's the same amount of work for a small company getting VC funding for $3 to $5 million, right? It's the same level of diligence, the same level of paperwork. So I thought, oh, maybe I could do this myself. And so I will tell you that feeling of signing your first engagement letter, delivering your first kind of output with no firm support, no quality control, you're the person and your knowledge, and then someone pays you your first invoice, you're like, oh, wow, I actually did it, right? And I think that was such a gratifying feeling. And then to step out on your own, to pick the clients that I want, the industry that I want. So I work with a lot of fintech, SaaS, health tech. I'm an entrepreneur in residence with Mars Discovery District for the last 3 years, essentially offering office hours for these founders who want to make sure that their models are data room ready. So just to be able to just now see everything that's going on, being plugged into the whole AI world at such a granular level where I wouldn't have been able, at least not for another few years, when you work for a big company. So that's kind of my short story.
So Wilson, I have a question. So when you initially decided you wanted to go on your own, where did you get all that information from to realize how you were going to go out and sell yourself to other people?
I think the one thing that's great about the firms at the time was, so any of these big accounting firms or consulting firms, I like to think that we are the revenue center there, not the traditional accounting cost center as you would be at a normal company. And so over the years, it has always been encouraged to build your network, right? So go for lunches with lawyers and bankers and industry professionals. And I think over that time, I spent 10 years in public practice. You kind of get the confidence that, okay, I think there is a appetite out there for, if I wanted to do this on my own at a fraction of the price, right? And so it only takes a few conversations to then realize, oh, I think this is a viable opportunity. I also thought that, COVID had just started, and which meant partnership at the firm was going to be delayed at least another few years. So I had to make the gamble myself. Am I going to stick around to try to make partner, or should I try to go out and do this on my own and try to succeed? Yeah.
So the reason why I asked that question is just simply because, think about how many founders. You have a leg up on most people because you have that experience, but how many founders who don't have that experience and they just want to put themselves out there and realize, I have no idea where I'm supposed to go with this, and just start throwing shit at the wall and hoping some of it sticks. Whereas, they can talk to somebody like you, like Tanya, like me, and be someone who could show them the ropes and help them figure out what it is that they know. And going back to what Robert says, like, you don't know what you don't know. This is what it is that I personally like to be able to teach people and help them with, and so they can actually make something of themselves.
Yeah.
One thing I just want to add to that, and I know Tanya and Trevor, you guys are much more on the growth and marketing side, which I think any founder who's about to launch something, they're already thinking about that. I can tell you from my experience, finance is the last thing people are thinking about. They're like, oh yeah, you do bookkeeping. And I'm like, no, there's more to that than just bookkeeping. It is building something that you can sit in front of a VC or investor and you can confidently explain your story. And one thing I try to tell founders is just watch Dragon's Den, watch Shark Tank. It's that, where did you come up with these sales? Where did you come up with profitability? And what's your valuation? That's the education that I have to give them, right? So at least in your world, they're already like wanting to sell something, whereas in my world, they don't even know anything about finance.
Why in the world would we need any kind of accountants or bookkeepers if we haven't even sold anything yet? There's nothing to account for.
Yeah, and I do wish you were right, Wilson, that founders are thinking about growth and marketing earlier in their growth journey. In my experience, they're thinking about sales, which is not the same as growth or marketing-led growth. It is often like throwing spaghetti at the wall if you don't have a roadmap, which growth functions and marketing functions can certainly help. But yes, finance is key. And I come across so many companies that are, looking for support on getting funding, and they think that it's all about the narrative or the positioning or the brand. Well, there's a lot more to it than that, and that's where I like to partner with individuals such as yourself, or even bring someone in who could help with, a TAM SOM study and get a real accurate view, not just an evaluation view, but a view into the potential of the market, and bring finances in much earlier, which, of course, fractional makes it all the more accessible.
Okay, so a startup makes the decision, all right, I'm going to go and hire fractional, any one of us on the pod here today, and we know the pressure is really on. The startup does not have a lot of money. They're watching every penny. And so you pretty much got to prove to them your value, if not in the first 30 days, in the first 90 days. You got to show them some kind of ROI that's going to make them go, all right, this person knows what they're doing. We're going to keep going. So each of you, what do you do to prove that ROI, get that quick win in the first 90 days when you come in and start working with a startup? Let's, Trevor, start with you.
I'm just going to give you the standard consultant answer. It depends.
Ooh, we just let you go. I'm not hearing ROI there.
So it truly does, though, because it depends on the organization we're talking about and the size that we're talking about. So in your example, if you're talking about somebody who's just starting out and never sold anything, that's a bigger issue than if you're talking about a mid-sized company that's already got a few years in and they've made some sales, but they've just hit a plateau, right? Yeah. So if we're talking about it's the second one I'm looking at is, well, who are you selling to? Who's buying your service, and what it is? Why is it that they're buying it? And then if you're looking at that, then you actually start to figure out, okay, well, are there any other lookalike companies that we can do something similar with? Because if you already got customers, the best place to start is asking them why it is that they purchased from you. And then once you start doing doing that type of strategy work, you can start to really understand what it is that's going to make people or get people to buy what it is that they're offering, and then make that a repeatable process and start looking at how you can talk to more people who look like that customer to get to where you need to go.
Yeah, I'm totally on board with you. As a fractional CMO, one of the first things that I do in an engagement is buyer interviews. Now, I don't typically work with startups, but I've still run situations where not only are we going to interview recent buyers, we're also going to interview some people who bought with a competitor, because we still want to understand their journey and why they decided to buy from them instead of us. So kind of ties in with what you're saying. A startup has no customers yet. They have no buyers to interview. Go interview the competitors' buyers. Really rich data there. Wilson, how about you?
For me, you'll normally start to reach out to me when you're ready to go capital raising. And so the simple thing would be to do a sprint. Usually it takes me about 2 weeks tops to build you a full 3-statement financial model. And then depending on the service level, if you want the fractional CFO service, my pitch has always been, CEO, you go do your dream pitch to all the VC investors because they love you already. You know, maybe you're a software engineer, maybe you're a doctor, and you've built something really interesting. Then when you start getting grilled on the financial side of things, hand the mic over to me and I will walk them through the model that I've built. And with my expertise and experience, most of the time the VCs don't have questions on that. And again, this is one of the things that we always often debate in that C to Series A is that I think everyone knows the financial forecast is made up because you have your pre-revenue, you don't know where you're going to be.
We don't use that term. We don't say made up. We say best educated guess.
Yes, exactly. Right. like Tanya said, spaghetti on the wall and see what sticks kind of thing. And the thing I like about that is, just because it's a forecast doesn't mean I can't put meat on the bones, right? So have all the drivers, everything fleshed out, all the way to unit economics, so that at least it gives the reader some sense that, all right, the founder actually thought about this, right? They actually thought through it. It's not just hard-coded numbers, 100,000 every single month, there's actually some thought behind it. Because what you want to do is you just want them to check the box that the financial forecast was reviewed so that the VC can then focus back to talking with the team, which is what they're really investing in. So that's where I found good success and good continuation after that.
And Wilson, you probably have the easiest job of all of us to prove ROI because your numbers guy, the ROI is, did we get funded or not? It's pretty tangible. But Tanya, back in your world, in my world, in the marketing world, what do you do in the first 90 days with a startup to prove ROI?
Yeah. First of all, sometimes I don't have 90 days. I'm brought in without, it's just like, let's see what we can do here, with no commitment on either side. Similar to Trevor's answer, it depends. It depends what stage of growth I'm brought in at. But in general, a little evaluation of the status. Where are they? Where have they been spending? What do they consider the biggest blockers? What does their tech stack look like? What percentage of their operating budget is actually going into marketing, and in which areas? And what are the key objectives of that particular stage of growth, biggest gaps, et cetera. So a bit of a mini audit. I often will do that ahead of signing a contract. I want to know what I'm getting into and what I'm looking at. And then as a part of my proposal, I'm putting down what I think the roadmap could look like. It really does depend. I can come into a brand that has, for example, already engaged a brand strategist and a designer, and they have a really well-considered visual language and identity, and they've got a really clear vision and mission, and their messaging foundations are in place. And then it's about operationalizing that, maybe looking at, how is sales engaged, and are they being enabled correctly? How are they going to market? And so the way that I work, it's never cookie cutter. And in addition to the fact that I don't work alone. So at the Articulate Collective, the disruption to the playbook that I was speaking about earlier was not just how I as a marketing leader can come in and support more efficiently and effectively, but how can I also play an advisory role, or even just a project oversight role, where I can help guide a client to understand which resources they should be bringing in at the stage of growth that we're addressing. My best case study to date is a company that I've been working with for over a year, and we started with all of those brand foundations. We started with the brand strategy, the visual identity. Then that team moved out, and we brought in technical SEO, content SEO, paid search. That was phase 2. Then we are now in phase 3, and we're looking at automating through agentic support and AI support. And how do we really, turn up the volume? So ROI is absolutely possible and should be possible at every stage, but it varies considerably depending on when you come in and how you're supporting the client.
And what's
It also
interesting
depends.
is all
Oh,
those
sorry, go
things
ahead.
sorry, Trevor, all those things you're talking about, whether you're starting with a startup or a mature business, it's kind of the same playbook, right? You're looking at all those things. So that question, it depends. In one sense, definitely depends, but in another sense, actually business is business. No matter what stage you're at, there's fundamentals that you need to get right. And there's
Sure.
mature businesses out there who
Yeah.
have not gotten them right yet, as much as a
Correct.
startup hasn't had a chance to.
Yeah.
Trevor, what were you going to say?
100%.
It depends on also who you're selling to. Because if you're selling to B2C versus B2B, they are very different sales motions. And you could have the greatest information and positioning and everything else. But if you're selling in a B2B scenario and your sales reps have no idea how to sell in a B2B scenario, you're not going very far. And understanding the sales enablement part of that and teaching people how to sell, because everybody thinks they can just show up and just start talking about stuff and people are going to buy from them. That's not how sales works, especially in a B2B scenario when you're talking about the higher dollar amount sales, where you're talking like, $3,000, $4,000, $5,000 a month that you're talking that you want to sell to a business. Someone's going to have to sign off on that. Right. And the higher dollar amount for your sales, the more people are going to have to be involved in that purchase decision. And if you don't know how to navigate that as a salesperson, because nobody teaches you that at regular school, you need to go to business school for that, or you learn from the school of hard knocks, right? Either way, you need to learn those lessons. So my answer to that is, do you want to learn them from me, or do you want to go figure them out on your own? Good luck with that.
I like the way you summarized it, Robert. I think that the answer is that maybe we could all align on, if I could speak on everyone's behalf, is getting the foundations right. Before anything, evaluate what are the foundations from which you're working from, and make sure that those are solid. It's like architecture 101, right? You can't scale what isn't aligned and what isn't securely laid out.
It's like trying to build a house of cards on the beach.
Yeah.
On a windy day.
Yeah.
All right, let's talk about mindset. So a founder goes ahead, pulls the trigger. All right, I'm hiring, a fractional. They need to kind of there's this letting go that a lot of founders have an issue with. They're going to give responsibility to somebody else to do something. They have a lot of skepticism. Let's talk about that mindset shift that a founder needs to make to really get the most value out of their investment in a fractional executive. Anybody want to pop in on that?
Yeah.
I could jump in on that one. Because I see it, especially in the early stage days, they take care of everything. So they've done the bookkeeping, or they have all the credit cards, they have access to all the banking. And the whole idea of bringing in an outsourced back office accounting function is to take away all of that from the CEO so that they can do what they do best. And so I think just trying to give them the best practices of just hand the banking over to me, hand the accounting over to me, let me take care of it. Download these apps so you can start taking pictures of your receipts and to kind of get that separation. I think that's often the biggest challenge. And obviously it's a trust thing too, right? Anytime you're dealing with banking and numbers and cash, like everyone's a bit antsy about that. So just giving them the comfort that it is me that is taking over, not some outsourced, overseas team. Safety, cybersecurity, all the controls that are in place. But ultimately, the fact that when you hand it over to me, I take care of accounting and finance from there so that you can be out there selling and making the dream happen. And that should give you 10 to 20 hours back a month and leave all the mundane stuff over to me. So that's one thing that I found. The second part that I struggle with personally is founders thinking that you're part of the actual full-time team as well. So it goes from fractional to like, let me message you every single day as well. And I think
You're my dude.
yes, yes. So it's trying to communicate and align expectations and make sure that we are fractional in nature and that we do our best to manage expectations.
Yeah, that's a critical point. How do you put guardrails around that? The founder, that's a great point. We come in as a fractional, but the founder kind of forgets about that fractional piece. And they feel like, oh, I've got now a new full-time team member who's going to put in 80 hours a week just for me. What do you do to mitigate that? Do you set the ground rules when you come in, or do you kind of wait until something like that happens to really have the serious, tete-a-tete, as we say in French, that head-to-head, face-on conversation of, I love you, but.
By then it might be too late, though.
Answer that. I'll let my colleagues answer that first, and then I'll give you my opinion on that.
Yeah, because by then it might be too late, though. You may already be in it, and it's tough to have that conversation. But I mean, you have to be able to have hard conversations. Typically, for like people like me, I try to put that in my contract that I'm signing with that individual company, and say, look, this is the expectation. I'm going to do this much for you over this period of time. Unfortunately, when it comes to marketing and sales, it's not really so much as I'm only going to work 10 hours and that's it. No more. Once that clock hits 10, I'm done working for you. So, there is obviously going to be a little bit of nuance and kind of flexibility there, but it's certainly not going to be 80 hours. It might be 15 if we schedule 10, if we want to have conversations outside of that or whatever else and also depends on the business. I may or may not charge extra for it, but you can also put that in your contract up front as well.
So define the scope in your, agreement as you're starting up, and be on high alert for scope creep. Tanya, is that kind of what you do?
Over time, as my business has grown and I've become more confident in being able to have a steady, retainer of clients and bring in new business, I've tended to charge more to compensate for what is inevitably going to be scope creep, especially to Trevor's point in marketing. I just expect that I'll be giving up to 15% more, sometimes 20% more time than I've originally scoped. So I bake that into my price.
That's an interesting way to kind of head off that conversation. You just kind
Yeah,
of build it in. But what happens if, okay, so it starts, but what happens if it goes beyond that 20%?
it never has, so I can't really speak to that. My clients, I guess, have been really lucky, have been respectful, and
Knock on wood.
yeah, knock on wood. But I mean, I would just have a frank conversation. I'd say, hey, and that's not true. I do have one customer where I do tend to be pushed into work that is at risk for pushing me beyond scope, and I will often just flag it, and then we'll look at the priority list and cut things out because they're really very strict with their spend. So yeah, just
All right.
being
And
upfront.
Wilson, what's your magic bullet?
Yeah, so similar to accountants and lawyers, we still do timesheets, so I can prove how much time I've spent. And to Trevor's point, in the engagement letter, typically, it's like up to a max of 30 hours a month. So it's essentially 7.5 hours a week. You don't have to. It's not 7.5 every single week. It's maybe there's a sprint for 10 hours and there's nothing the next week, and then there's something at the end of the month, right? And if it's fractional CFO, and if I'm going to be named CFO, meaning that I'm on your website and pitch decks and all that kind of stuff, usually I'll ask for a piece of equity. So like we're talking advisor equity. We're not talking like 5 or 10%, just 0.5 or something. It's just a little sweetener just so that I'm not nickel and diming them, and the founders feel like, all right, I can count on you, I can call on you. But to everyone else's point, it's after like a couple of months where, I'm looking at the time reports and I'm like, all right, we're consistently going over. That's when we'll have, and usually my contracts have a renegotiation kind of clause where it's like, if we're spending on average 25% more time, then we need to rediscuss scope, or do you need to find somebody else on your team to do certain mundane activities, right? And that we're doing the higher level type of work. So yeah, managing expectations, managing your engagement letter, and then trying to get a sweetener in there just to compensate for, overages from time to time.
I'm super
So
interested
I have a
about
question.
yeah.
No, go ahead, Tanya.
Okay, thank you. I'm curious about the equity piece.
Same.
Okay. All right. I've never had a discussion around equity except for when a founder is offering me a percentage for a reduced rate. And I have never said yes. Not that I wouldn't, but I guess I haven't worked for a customer that I thought, oh, for sure. I believe, in the early stages anyway, that this is going where I want it to go and it's worth my while. So how do you bake that in without then getting pushback saying, well, if we're going to give you equity, maybe we should pay you less?
So it's a great question, and it really depends on the size of the company. I will say that Series A companies or more, so ones that have raised 5 to 10 million with a 30 to 50 million valuation, generally speaking, fractionals will usually not get equity in those situations because, hey, if you're not going to be part of the full-time team, I'm not going to give you equity, and that's usually the pushback I get.
Yeah.
But in that seed and pre-seed where it's like, hey, I'm going to add a lot of value, whether in your case it's like launching their first product, getting them to commercialization, or in my case, it's like closing the round. Hey, if I can get you $1 million to $5 million, give me a little piece of that. If you want me to be fractional CFO and you want me in the pitch decks to add that credibility in your pitch, then that's where I need the little piece there as added compensation. Because I think the difference in my role is, fortunately or unfortunately, even as a contract CFO, I am deemed to hold the seat of CFO, meaning that I hold all the liability associated with that, which is where when you explain it to the founder, they're a bit more comfortable that, okay, there's a reason why I'm giving you a sweetener on top of that. So for me, it's a little bit different in that sense.
Yeah. I hope you're taking notes, Trevor. This is the difference I mean, for me, and I am, this is the difference between a finance mind and a marketing mind.
You don't need
After
to take
the
notes. This is
engagement,
being
then,
recorded.
So after the engagement, then do you then cash out that equity or do you hold on to it?
I mean, it's early stage, so you're kind of riding the ship with the founder, and I think like anything, you'll take a few of these equity pieces, and you're just hoping that one of these goes to the moon, right? And but that's where after you close the round with the equity piece, it almost I don't want to say guarantees you, but it almost has the founder is going to continue to use you throughout the entire growth phase
Retention
until
tool.
Series A, Series B, when VCs and other investors come in and they have their own chief person that they want to put in full time, right? And that's totally fine, right? I'm here to fractionally help you through the whole scale up phase until you need a full time person. And I'm finally, after 3 years of doing this, there are a couple of clients now. We went from 6 people to 45 people. We went from pre-revenue to, doing 1.5 mil a month, and I'm like, all
Nice.
right, I can't do anything else for you now. You probably need a full-time person, right? And I'm happy with that.
That's
So cash
how
me out, and I'll be
Yeah.
on my way.
that's oddly how fractionals
That's
define
great.
success, is putting ourselves out of a job by hiring a
Ideally,
full-time person to
yes.
take our
Yep.
place.
Yep.
Weird business is fractional thing. Okay, if a founder is listening right now and they're stuck and they only have bandwidth / money to focus on just one area to improve on, what do you think it should be? And each one of you will have a different answer just depending on your specialty. So, Trevor, let's start with you. What would be that one area that's at the top of the pile that's going to, make the biggest difference? That lever, when you pull it, is going to have the biggest impact to hopefully, help the company, help the founder get unstuck.
So I'm going to look at this from a marketing and sales lens. And my first thing that I want to look at is, what are you saying to people to get them interested in buying from you? And if it's not moving the needle, then you need to fix that. Because what you say to people is going to be the only way that they're going to really understand what it is that you do, especially if you're new in a market, or if you're trying to sell them a product they've never heard of or never thought of. So educating them is important. And that comes down to basically just like messaging and positioning at that point. And then sales skills.
Tanya.
Assuming the product's good, assuming they have brand foundations in place, get your marketing operations up and running. Make sure that you're driving strong share of voice, visibility, get a footprint in the market, establish that mind share. So it comes back not so much to, education's a part of it, of course, and driving demand is a part of it. That's a whole other topic. I don't think that we drive demand as a marketer. I think we maybe capture it, but we capture mind share first. And so getting that share of voice, making sure that your web properties are optimized, making sure that you're in the top 10 of the SERP, of the search engine results page. You're also featured in the large language models. Make sure that when especially in B2B SaaS, 95% of your market is out of buying mode at any given time, and only 5% is in. And so, but by the time anyone moves from that 95% category into the 5%, they've already got a short list of solution providers in mind. So making sure that you've got that mind share, which is achievable through that top of funnel visibility, the thought leadership, the search engine optimization, etc.
Wilson.
For founders, what they need to, if you're limited on resources and you're trying to make sure that your business is running well, and I know I said in the beginning that this isn't a big thing, but I think just simply just having bookkeeping, just monthly bookkeeping. Find a service provider out there, $300 a month, $400 a month, something that is immaterial enough, but it gets you in the mindset of, okay, I need to make sure I keep all my receipts. I'm doing all the bookkeeping. I'm closing my books every single month, because more often than not, sometimes when I get called in, it is, oh, I'm going through due diligence with a VC and they want year-to-date books and I'm 5 months behind, Or in some cases, I'm a year or two behind and I haven't filed my taxes with CRA. And so you can't check off the compliance certificate with CRA that all your taxes are up to date, your payroll is up to date. And then all of a sudden I have a huge mess that I'm catching up 18 months of time, and I'm going to charge you not a lot of money, but I'm going to charge you for it. A
lot of hours.
Because, yeah, you didn't want to spend $300 a month for someone to actually just, it might not be perfect, but at least somebody is actually keeping your books up to date, right? So at a minimum, keep your books up to date. I know it's such an easy thing to say, but you'd be surprised how many people just let it fall to the wayside, right?
Well, again, there are those who know but pretend not to know. And then there are others who we come back to don't even know what they don't know.
Yeah, I'm a sucker for the quarterly updates. I just, this is how it is.
But I would say if you're not out there capital raising and it's your own business, you know, even for me, sometimes I'm like, I'm like a month behind, and you know, if when it comes to you, you're like, I'll let it go. But it's mainly for those who are looking like. Again, where I come in, I have a lot of relationships with shred financing or, you know, BDC. You want to go for, you know, venture debt. All of these things, your books need to be ready, right? And yeah.
All right. Final question for each of you. If you could put one message on a billboard for millions of startup founders to see, and they'd be driving by this billboard every single day on the highway of life, back and forth, what would it say?
Why should anyone care?
Why should anyone care?
Yeah, like why should the world care about your business offering? Like, get that straight. Especially in B2B tech and SaaS, it's almost 9 out of 10 times, 9.9 out of 10 times, I'll come into a customer engagement in this space, and it's so feature function, messaging led, and it can take me days and even weeks to figure out why the fuck should anyone care? What is the point of this? Oh, there's all the bells and whistles and all the AI and all this and so. And getting to that is not always straightforward, and especially companies that are built on very bright engineering minds, the message that underpins the offering is often buried in the offering.
You want to sell more? Learn buyer psychology.
You want to sell more? Learn buyer psychology.
Correct.
Wilson.
Awesome. Okay, so what's in it for me?
Right?
What's in it for me?
And I'll preface that it's not from like an investor mind, but it's more so as a founder, you really need to figure out your pricing model, and which then figures out what your valuation is going to be, because when you then pitch to a VC, it's what's in it for them, right? So if they invest $1 million or $5 million to you at a 20 million valuation, can you get to 100 million? Can you get to 500 million? The amount of models that I built where I'm like, when you want to get 100 million revenue in 5 years and we whittle it down to unit economics, all of a sudden it says I need, 20 million customers. I'm like, there's not even that many people. I mean, there's not even that many eligible customers in Canada, right? So are we expanding to the States? Like, is this even a viable business, right? So that's where what's in it for me is more about just figuring out your pricing model, your unit economics, and really just go to the nth degree of that calculation, right?
See, Wilson's billboard understands buyer psychology.
We should have all 3 billboards right next to each other.
Yeah.
They all kind of go together.
I have a better title for my billboard. I've rethought it. It's What's Your Story?
What's your story?
Yeah.
Nice. All right, everyone. Thanks so much. Wilson, how can people reach you?
You can reach me, you can send me an email after this podcast, or you can find my website, www.quantum.io. Thank you.
Nice. And Tanya, best way for people to reach out to you?
You can hit me up on LinkedIn, or you can also go to articulateyourbrand.com and reach me via there.
Nice. And Trevor?
I'm also on LinkedIn regularly, marketinggeniushq.com or .ca, either one will do. I also have a side hustle. So I also work with a brand called Consulta, which is a consulting platform. So people can find a whole bunch of other fractional consultants on a platform as well. So if your business is looking to find people like Wilson or people like Tanya or any whole host of them, they can go to the platform and the platform will be able to hook them up with good people.
Nice. And once again, any fractionals who are not already part of the Fractional Pros Canada community, join us on our Facebook group, Fractional Pros Canada. If you're not on Facebook, DM me. We'll hook you up through LinkedIn. All right, everyone. Thanks so much for joining us. This was really interesting. My big takeaway is that as much as we focused on problems that startups have, it's really the same problems just about more or less any business has at any stage. And I always find that fascinating that we just lose sight of the basics. Thanks,
Fair.
everyone, for joining us here
Awesome.
on the Fractional Pros Canada pod.
Thank you,
Thank you so
everyone.
much.
That's a wrap on another episode of the Fractional Pros Canada podcast. If you're a fractional professional based in Canada, we'd love to have you join us in the Fractional Pros Canada Facebook group, the home for Canada's fractional community. It's where Canadian fractional executives connect, share insights, and help each other succeed. Until next time, I'm Robert Mendelson, Fractional CMO. May your impact be full-time, even if your hours are fractional.